The current landscape of Bitcoin ETFs presents a compelling narrative for the future of digital assets. Projections indicating the potential surpassing of gold in value and eventual outrating of S&P index ETFs underscore a paradigm shift in capital allocation. Predictions extending to 2034 suggest a day when Bitcoin ETFs could boast more capital than the S&P index, marking a significant milestone in the evolution of the cryptocurrency market. The anticipated growth in Bitcoin ETFs is not merely a speculative trend, but is grounded in the ongoing institutional adoption of Bitcoin. Notable figures, such as Michael Saylor, emphasize the transformative power of Bitcoin as a digital asset within a nation. Drawing parallels to historical powers like air, sea, and space, Saylor underscores the pivotal role of harnessing digital power through Bitcoin for a nation's future resilience and prominence. Critics point to the flaws in the current Keynesian monetary system, citing fractional reserve lending and unsustainable debt growth as key issues. The inefficiencies of the debt-driven GDP growth model are highlighted, painting a grim picture of a system in a monetary cul-de-sac with potential outcomes of sovereign debt collapse or rampant inflation. In this context, Bitcoin emerges as a solution, advocating for a return to a sound money standard. Its deflationary nature is positioned as a remedy to the flaws inherent in the existing monetary framework. Bitcoin's revolutionary force is seen as a response to the inadequacies of the current economic system. Michael Saylor boldly predicts the onset of the Bitcoin gold rush era, commencing in January 2024 and persisting until November 2034. Saylor envisions a decade-long institutional gold rush for Bitcoin, triggered by the introduction of spot Bitcoin ETFs, as banks face pressure from their largest clients to offer Bitcoin custody services. The mining status of Bitcoin provides additional context to its evolving narrative. Currently, approximately 93.5% of the 21 million Bitcoins have been mined, with projections indicating that 99% will have been mined by 2035. This impending scarcity contributes to the perceived value of Bitcoin, especially as it enters what Michael Saylor predicts to be a growth phase in the mid-2030s. Market trajectory and investor sentiment play a crucial role in shaping the narrative around Bitcoin. On-chain statistics suggest a positive trajectory with year-to-date gains exceeding 50%. However, cautionary notes are sounded, questioning the sustainability of this trajectory. The sentiment among average investors is characterized by extreme group greed, raising concerns about the possibility of a more substantial correction or consolidation. Technical analysis of Bitcoin's price reveals an optimistic tone, with the cryptocurrency comfortably closing above $60,000, fueling speculation around a potential new all-time high. Attention is drawn to volatility hurdles, and the upcoming block subsidy halving in April is identified as a pivotal moment that could influence market dynamics. The impact of the U.S. Federal Reserve looms large in the crypto market. The upcoming guidance on the state of the economy is identified as a potential market influencer, with the crypto markets likely to react to the Federal Reserve's announcements. This adds an additional layer of uncertainty and volatility to the overall market scenario. A unique perspective is offered on the role of autonomous artificial intelligence, AI, in Bitcoin's growth. Michael Saylor suggests that the rise of autonomous AI will aid Bitcoin's institutional adoption. The launch of spot Bitcoin ETFs is seen as a trigger for a decade-long institutional gold rush, further emphasizing the transformative potential of Bitcoin in the financial landscape. In the midst of these analyses and predictions, it's important to approach the evolving situation with caution. Despite the positive outlook, potential volatility hurdles are acknowledged, and the need for caution is implied. Viewers and investors are reminded that the cryptocurrency market is dynamic and subject to various external influences. In conclusion, the narrative surrounding Bitcoin's growth, institutional adoption, and potential role in fixing the broken monetary system is complex and multifaceted. The bullish sentiment towards Bitcoin, coupled with cautionary notes, paints a picture of a market on the cusp of significant changes. The integration of spot Bitcoin ETFs, the impending scarcity due to mining limitations, and the evolving market dynamics all contribute to the ongoing evolution of the cryptocurrency landscape. Please go ahead by liking, subscribing, and sharing with friends to support our content. The information is for general purposes, Viewers should conduct research and consult professionals for financial decisions.